Good morning. Welcome to Bazaar Morning Call this Monday morning. It's a full 5-day week ahead. I'm Latha and Sonia and Anuj joining from their respective homes. Morning, both of you. Well, actually, this ends the 5-episode stimulus soap that we were subjected to starting Wednesday. And therefore, whatever the market wanted or was expecting is now out in the open. It's no surprise. Perhaps I'm not saying anything new when I say it's been a damp squib. The market was expecting something by way of a stimulus, and it's perhaps all the expenditure together adds to about 1% of GDP at best. If you stretch it, it may not be even that much. Unless the expense is actually done. But if you looked at the SGX Nifty, it's not losing. I mean, it's not as if the bottom is falling, for the simple reason that we have a fairly decent amount of support coming from the Dow futures. Not only did the Wall Street indices end in the green on Friday, they have since inched up considerably. It's a good nearly 200-point rise over and above the Friday levels. That's important. But the biggest support for the market, I think, will come from big boy Reliance. Now, as more and more people come in, like General Atlantic, the last one to come in, it's clearly moving to be India's FANG stock. And therefore, the under ownership will actually gush in to Reliance. So that might hold the end up for the bulls. But I'll leave that to Anuj. Good morning, Anuj. An outperformance of Reliance can pull up the Nifty, you think?
Good morning, Latha. Actually, it's already done that.
Yes,
I mean, if you see, remember the point you were making when the April series was ending is that May most likely is likely to play out per script, which is a big decline. Now, out of that, if you see the Nifty is down 7% this month, the Bank Nifty is down 12.5%. So why has the Nifty managed to hold up? Mostly because of Reliance and a couple of other stocks here and there, but Reliance clearly is the stock, and as you said, it's India's FANG stock now, and perhaps gets that kind of valuation. But within that, what's also interesting is if you look at the Nifty Midcap and Nifty Junior this month, they've been only down 3.8%. I think that's a big relief that while the market's seen some damage this month, it's mostly financials. And X of financials, the market is not doing that bad. Yes, the market is doing badly, but not as bad as the headline index would suggest. Now, as far as the Nifty is concerned, the Friday low was 90.50. The stimulus day low was 90.44. The Bank Nifty Friday low was 18,683. The stimulus day low was 18,287. So practically, we are now at the lower end of the range. On a closing basis, we've already made series low. So if the market has to bounce, it has to bounce here. Otherwise, there can be a problem at index level. Now, there's one more point I want to make. This market is extremely light. It's devoid of any shorts or longs. Yes, on margin, FIs have been adding shorts, and that long to short is now 34 to 66. But if you look at the absolute number of contracts, they have come down rather significantly. I mean, we've almost reached a stage where there's no interest in the market from that point of view. So yes, there was some short build-up on Friday, 7,900 and long unwinding. But let's see if the market has to turn. Also, the FI selling in cash market continues. Almost about 2,300 crores was sold on Friday. So the problem for the market is that the large cap end of the market, and led primarily by financials, is seeing a lot of selling. And I don't know if that selling has saturated or not, because it looks like there's some more left, and that's why perhaps at index level there's some more damage which is left in the market. Sonia, good morning.
Hi Anuj, morning. Latha, morning. Well, the SGX Nifty for now has cut its losses. About half an hour back, it was down 40 points. Now it's indicating a flat start. So let's see which way it goes. The other thing is that the lockdown now gets extended. Of course, that's the big theme. The cases are rising rapidly. And as of yesterday, we saw India had the highest single day spike in COVID cases. In fact, in Mumbai alone, there were 1,500 cases in just one day. So, of course, there's a double whammy of sorts. On one hand, lockdown getting extended, economic contraction. On the other hand, cases are spiking. But thankfully, the fatality rate is still much lower than what we're seeing across the globe. Having said that, just a couple of more points. As you said, FIs have sold quite a bit in the cash markets, 2,400 crores, double of what DI has bought. DI has bought about 1,000 crores, 1,200 crores or so. FIs have added shorts as well in the F&O market. So, Anuj, the question is this sell in May and go away theory has played out to script. Do you think there is still more selling to go now that the fiscal stimulus, that whole queue, the disappointment is now out of the way? Do you think there's more selling to go, and will this 93-9400 level become a bit of a resistance for the time being?
Yes, Sonia, a couple of points. While I agree the cases are going up, I think recovery rate is also going up. I look at positive, so that's a big positive. Look, I maintain the point that I make. There's no point preempting what the market will do. I think our job is to identify what the market is doing and what is a good, risk-reward opportunity for traders. So far, 9100 to 9500 is working. 9100 anywhere near that you buy, and you sell somewhere on 9500, it's working. I think now is the test of the market. We need to see now, with the stimulus package out of the way, whether the market range is expanding on the way down or not. And for that to happen, you will need a decisive break of 90.50 on a closing basis. On a closing basis, if that happens, then perhaps a move towards 87.50 is possible. But let there be no mistake about this. The bank Nifty is the problem. And the bank Nifty is bearing the brunt of whatever is happening, in terms of even the stimulus, in terms of the lockdown, in terms of the slowdown. Everything is what the financials have to face, and that's what financials are doing. And that's why my sense is the bank Nifty runs the risk of testing the previous lows, even if the Nifty doesn't. And Reliance, Telecom, IT, this is clearly emerging as the new leadership pack. You throw in a pharma as well. It becomes about the counterbalancing forces. So what happens to the outperforming lot and what happens to the bank Nifty. And on that, it will depend where the Nifty moves.
Okay, yeah, we've seen the Bank Nifty fall almost 13% in May so far, and marquee names under pressure. But Latha, morning, the consensus view that we got through the course of the finance minister's announcements was that there's nothing in this for demand stimulus. There are things on the supply side, but nothing for demand. But you tell us, what are the key takeaways and what should the market make of it?
No, I won't say that there is nothing for demand stimulus. I think there's a 40,000 crore increase in the MNREGS bill. It was 60,000 crore. Another 40,000 crore makes it 1 lakh crore. That's a lot of demand push that will be put into rural areas, exactly at a time when the number of people who will be demanding MNREGS work will increase because of the remigration back to rural areas. The other point we are missing out is, and I didn't add that in the list, is that the Kisan credit card now gets extended to animal husbandry and other farmers as well, dairy farmers. So that is a fairly decent number, and even the number of the Kisan credit card limits have been increased. So my sense is that bank loans also will go more to that category. It's not a great deal. It's about 10,000 rupees and 20,000 rupees in many cases. But it is still a lot of money in terms of, say, FMCG demand. And a third stimulus which could come is that states' borrowing has increased, the borrowing power. Now, how much they will actually borrow and actually spend is another matter. But that's also a sentimental big positive in terms of increasing demand at the very, very lowest level. Now, the flip side of that, if the states are going to borrow 4.2 lakh crore more, that many number of state bonds are in the market, yields will shoot up. Today, I confidently expect that state bonds yields are going to rise. And you know how it is. The lowest yield goes to the central government because it's the sovereign. The states, as the sub-sovereign, get slightly higher yields. And corporates will have to pay even higher than the sub-sovereign. So definitely the cost of capital for corporates is rising. Not much is happening in the bond markets, but if the corporate bond, whatever trades you see, be sure that the yields are going to rise over there, and the cost of borrowing, even working capital, just rolling over working capital for even AAA companies is going to rise. That's not EPS positive for the equity markets.
Okay, in fact, we'll get a lot of expert opinion through the course of the next 2.5 hours to break down all of those announcements. First up, here's what you'll get to see on the equity side. Chris Wood of Jefferies says the downturn in the Indian residential property market is of a kind greed and fear has never seen before. It has been driven by a series of policy-triggered shocks, of which the latest is the Modi-triggered lockdown. The two leading stock recommendations are Godrej Properties and DLF in terms of being viewed as the long-term beneficiaries of the ongoing brutal consolidation. DLF is in greed and fear's Asia ex-Japan long-only portfolio, while Godrej Properties was in the portfolio for 3 years until it was removed last December. Its price is now down 30% since then. Greed and Fear recommends investors with long-term holding power to own both these companies.
I think that's key, long-term holding